Okay, this is a critical financial alert for every single person receiving Social Security. There's a huge financial illusion taking place right now, and it directly involves your benefits coming in 2026. If you depend on that income, what you're about to hear could literally save you thousands of dollars.
So, here's what we're going to cover. We are going to pull back the curtain on the 3 hidden ways the government can legally take back your raise. And then, and this is the most important part, we're going to show you the exact steps to take to defend your money.
So, you've probably seen the headlines, right? There's a projected 2.7% cost of living adjustment, the COLA, coming in 2026. And it's being sold as this much-needed raise to help you keep up with all the rising prices. But here's the question that really matters. How much of that money is actually going to end up in your bank account? You know, for things like groceries, gas, or just paying the bills. Well, for millions of Americans, the answer is a hard no. And the reason why is something we call the silent clawback. It's basically 3 different government mechanisms that are designed to snatch a huge piece of your raise before you even get a chance to touch it. All right, let's dig into the first and, honestly, the most immediate clawback. This has to do with a direct link between Social Security and Medicare Part B. See, the two are tied together, and that connection is used in a way that might surprise you. In 2026, the baseline premium for your doctor visits and outpatient care is expected to be almost $203 a month. Now think about that. That's a major expense, and it gets pulled directly out of your Social Security check every single month. This table shows you a really simple but powerful example of how this works. Let's imagine your COLA gives you an extra $50 a month. Well, as you can see, if your Medicare premium just goes up by $20, your actual gain is only $30. Almost half of your raise is just gone. It never even made it to you. But for many of you, that baseline premium is just the start of it. And that brings us to the second and, frankly, the most dangerous clawback mechanism. It's called IRMAA, and it's basically a massive, hidden surcharge that works like a penalty on your income. So what in the world is IRMAA? It stands for Income-Related Monthly Adjustment Amount. And the real trap here is the government's strict 2-year look-back rule. Get this, your 2026 Medicare premiums are not based on what you're making now. They're based on the income you reported on your 2024 tax return. I want you to think back to 2024 for a second. Did you happen to sell a house? Maybe you did a Roth IRA conversion. Or perhaps you took a larger than usual withdrawal from a retirement account. Any of those things from 2 years ago can trigger this surcharge today, and it often happens without any warning. And here's the number you need to be aware of. If your income back in 2024 went over this specific threshold, $109,000 for an individual, the government has already flagged your account for these extra deductions. And the danger here is very, very real. As you can see, the government can legally deduct up to a shocking $689.90 on top of your standard premium every single month. And a lot of the time, you don't even get a warning letter. The money just disappears from your check. Okay, but the clawback doesn't even stop with Medicare. It also involves the IRS. And this is all because of what you could call a brutal tax bracket squeeze. Here's the core of the problem. The income levels for when your Social Security benefits start getting taxed, well, they were set decades ago. And guess what? They have never been adjusted for inflation. So as your COLA nudges your income up, you get pushed closer and closer to these totally outdated limits. So if your combined income, and that's a special formula, your adjusted gross income plus any non-taxable interest plus half of your Social Security benefits, if that number goes over just $25,000 as a single person or $32,000 as a married couple, the IRS gets involved. Your raise could be the very thing that pushes you over that line. So here's the bottom line. By pushing you over that tiny limit, your so-called raise can suddenly make up to 85% of your entire Social Security benefit taxable. You're basically getting hit with a new tax bill just for trying to keep up with inflation. Okay, now that we've really defined the problem, here is the crucial information you need to fight back. You do not have to just sit there and take these deductions, especially if your financial life has changed. The law actually gives you the right to appeal these surcharges. If your income has dropped in a big way since 2024 because of what's called a qualifying life-changing event, like you finally retired for good, you tragically lost a spouse, or maybe you lost a pension, you can challenge the government's math. The key to your entire defense is an official document called Form SSA C-44. It's also known as the life-changing event form. When you file this, you force the Social Security Administration to throw out that old income number and recalculate your Medicare premiums based on your current lower income. Taking action is a pretty simple three-step process. First, just confirm that you've had one of those qualifying events. Second, go get Form SSA-44. You can find it right on the Social Security Administration's website. And third, file it right away. This one piece of paper can put hundreds of dollars a month right back into your pocket. Look, the system is complicated. It can feel like the rules are stacked against you. But understanding how these clawbacks work is without a doubt the most powerful tool you have. Don't let the government keep you in the dark. You have to be vigilant, you have to stay informed, and you have to protect the benefits that you've earned.